Hey now, I'm back with another trading system review. In this installment, I am going to test the trading system featured in this Rainer Teo video that claims to have a win rate of 88.98%. And after my review, I am going to give you 6 optimization tips to increase this system's versatility over more markets. But if you are not subscribed, then you may look at your trading account like this. I call this system the Rainer regurgitation, and like most trading systems, it can be adapted to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This trading strategy utilizes 2 free TradingView indicators. As always, links and settings to all indicators are listed in the description below. The first indicator is the exponential moving average, or EMA. The length is set to 200 and I'm going to color it in white. In this trading system, the 200 EMA will be used to determine overall trend direction. The second free TradingView indicator is the Relative Strength Index, or RSI. Per the original requirements, I am going to set the RSI length to 10. In addition, I am going to check the box to display the RSI line and set the upper band to 40 and the lower band to 30. The 10-period RSI will provide our entry triggers. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. A quick note, the system as described in the video specifies no stop loss level, and thus no way to exit a losing trade. In order to make this test realistic, I am going to specify a repeatable stop loss level. This chart is the S&P 500 Index daily candles. The rules to enter a long on the Rainer regurgitation are: first, price is above the 200 exponential moving average in white. The second rule requires that the RSI go below the 30 line. Both entry rules are met when this candle closes. That is our trigger candle. We place our stop below the previous swing low. We are going to exit the trade on the candle that closes when the RSI goes above 40 or 10 candles close. And the RSI goes over the 40 mark, so we exit on the close of this candle and book a win of 2.5%. I have one more long example. Price is trading above the 200 EMA. A candle closes with the RSI under the 30 line. When this candle closes, it serves as our trigger. The stop is placed at the previous swing low and the target is dynamic. We exit the trade when either 10 candles close or the RSI goes over 40. Here we have the latter for a risk to reward ratio of 1.8. There are no rules for shorting, so I am just going to test for longs and then do what I do. If you enjoy this content, hit the like button. Remember, this is just 100 tests on one instrument. If for some astonishing reason you are thinking of using this system, please do extensive back and forward testing and be sure to let our community know what you discover. This test was done on the S&P 500 daily candles. It took 6 decades to find the 100 setups. The win rate here came in at a surprising 22% with an awful profit factor of under 1. Most wins in a row came in at 2, and the most consecutive losses came in at 16. Risking just 1% per trade, this thing would have lost you well more than 20%, including fees and spreads. But I do have some simple changes, indicators, and rules you can add to this system to make it perform much, much better. And who knows, maybe actually make a profit. Here is the equity curve, and here is what I think of it. What score would you give this strategy? Log on to the community site and let me know. I give this system a Trader's Landing score of 0 because the entry rules are putrid and the exit rules are ridiculous and the stop loss level is problematic. Remember, the enemy of great is good, or in this case, the enemy of awful is Trader's Landing. I have 6 ideas on how we can improve this system. First, the biggest problem with this system is the entry signal. The RSI going under 30 does not signify a change in local trend direction. Actually, it portends increased momentum to the downside. You can change the entry to when the indicator goes back above the 40 level. This would have saved you so many trades during the test. The second item to add is changing the stop loss level to 1 times the ATR. Looking at the same chart and adding the ATR band set to 1 time the ATR, we can see that even with the original entry method, this trade would have been saved among many others. The third item to examine is the fundamental theory this system operates under. When you manually backtest a system, you will see for yourself how your system is interacting with the market. These are some specific things to ask yourself. Are you leaving money on the table by taking profits too early? Are the indicators you are using working as expected? Is your trading system applicable to the time frame you are trading on? These are key points to designing a successful trading system. Furthermore, getting out after 10 candles or after the RSI goes to 40 is absurd. You can see that this system causes you to miss this entire move. Putting a trailing stop here or even a fixed risk versus reward would have yielded you tremendous profits. In addition, you can change your profit target to be dynamic, but in a more profitable way. Look at the strength of these trades taken as a whole when exiting on the super trend signal. Next, in a strong trending market, you can keep things simple. But on this chart, entering when the stochastic goes from oversold to above the lower band would have gotten you 7 winners and 1 losing trade. Moreover, it is important to use the right tool for the right job. You can see here that the RSI predicts this change in direction because of this clear divergence at the top of the channel. This may be a better way of using the RSI in this particular system by filtering out setups like these. I encourage everyone to head over to the Traders Landing community where we are discussing all things trading. And have a great day because you deserve it.